Steel industry has been under a lot of focus recently, given all the controversy surrounding Mattel. But we've got a new listing in the studio, BSI, and the CEO and Chairman, William Battershill, is in the studio with us. William, you listed this morning. Are you happy with how things went?
Yes, yeah, we're on the board, and I suppose that's the first step. So we'll see how things develop from here.
You didn't float the whole company. It was only about 22% of the company that was floated. Why such a small portion?
We really just wanted to test the water. It was the first step into a new venture for us. And quite frankly, we as the management see a lot of value in the business, and we wanted to sell as little as possible. So we've just put the 22% on, and we will take it from there as we go forward. Probably looking towards the middle of next year of listing a bit more of the business, and particularly increasing our PE status.
Your own holding pretty substantial at the moment. Any chance that you'll realize some gains or look to get out a little bit of what you put in?
No, I've taken some cash off the table now, and I'm happy with that. I don't need a great deal of personal wealth, quite frankly, and so I'd rather see my investment in the business. Although we may relinquish some shares going forward in the next year.
You've got a pretty strong board by the looks of things. Ethan Dubeon and list on a number of boards on the old tax and involved in Riani Capital as well. How important is that sort of experience for a listing like this?
I think it's great, especially for ourselves, typically, or having been a private company, private one, I think can perhaps get a little introspective. I think it's excellent to have outside influence. Nigel Payne's also on the board, a top guy. Well known in various industries. He's on the JSE board, in fact, as well as Glenn Rand, Bidvest, and Mr. Price. So he's a man of some standing. So the two of them are certainly add a lot of value to the business. We had a recent strategy session a couple of weeks ago, and I was very pleased with the way that we interacted with them, and I think they will certainly add a lot of value to the business.
What does the business do? I think that's the question a lot of people are asking.
Yes, well, we're basically traders of steel. We stock steel and distribute it. The business is broken into four different facets. Firstly, we do a certain amount of processing, but we add a little bit of value. We take large coils and cut them into sheets and split strip. The stockist operations are obviously positioned to give a JIT service to the immediate surround.
JIT, just in time.
That's right, yes. We have an export division, which is principally involved into Central Africa, mainly DRC, Congo, and funny enough into Zimbabwe. We still manage to do some trade in Zimbabwe, although we're not represented there with stockists on the ground. And finally, we have the trading business, which deals in large volumes of steel, typically to customers that order in advance, or we take opportunistic views, we take positions in the market, we buy stock, and that company trades in that manner.
Processing a pretty small part of the business at this point in time. Is there likely to be an increase, given that you are looking at a specialist processing plant or as an acquisition? But what's the thinking behind that part of the business?
Yeah, processing really is a means to an end. We take raw steel and we convert it into a usable form. So it's not that we add a great deal of value, it just simply turns it into a form that our customers can use. But we are looking at some specialized processing at the moment for certain sectors.
What sorts of things?
Mainly into plate. The plate market at the moment is becoming a larger part of our portfolio. We've been in it for about 2 years now, 18 months to 2 years. And we see some opportunities in respect to specialized plate processing equipment.
There's a drive, particularly from the DME, and just looking at beneficiation as a means to an end, and to further benefit and enhance the current industry as it stands. Would that be something you'd be interested in looking to get into in the future?
I'm not familiar with
the Department of Minerals and Energy.
Yes,
but beneficiation as a process, and particularly adding value to exports before we do that. Is there something of that in your future?
I think really that's something that lies in our customers' hands. They're the people that make the goods, and so it's up to them to take advantage of that issue. So we're a supplier, and we don't go beyond the supply of raw steel.
Interestingly, the shares were 10 times oversubscribed, particularly vivid interest by the institutional market. What's the feedback been from these institutions? What would they like to see you doing?
Listen, they're obviously, they've got broad-based investments typically, and they're looking to make us the biggest return they possibly can. So they would be pushing us to grow, and we certainly intend to do that. So we will grow our bottom line. It's really all about net profits when it's all said and done. So we've got a target that we've got to meet at the end of this fiscal. We've had quite a significant increase in earnings from prior year. And following on from that, our growth strategy will be both organic within the business. We've talked about certain developments in terms of processing. These new products that we are considering, But we will certainly be acquisitive as well. We think that in order to exploit the projected growth of South Africa, we really need to buy. I mean, it's a good way of getting into the market as well, because to get into the market without being acquisitive, you have to take market share from other people, and that can be a long and painful process. And often it's a lose-lose for all parties. So it's a good idea to buy people that are well positioned in markets that you are not currently involved in.
What sort of markets are you looking to get into?
Well, we see the structural steel market as a big growth sector, as is obvious. Perhaps looking at reinforcing bar. Reinforcing bar we do in Zambia and the Congo in its raw form. In South Africa, it's more of a specialized industry. Most of the rebar taps are cut and bend, and they're often actually fixed. That is an industry we would look at. As we see reinforcing bar undoubtedly as being one of the particular products which is going to be growing significantly in for the next 5, perhaps as much as 10 years. But certainly we're looking at a 5-year very bullish offtake or demand for steel in South Africa.
Is that where the 150 million rand that you raised is going to be employed?
Well, 157 million, 57 million went to the vendors, so 100 million is going to the business. 38 million is going to buy the agencies in Zambia. So we bought the Lusaka, Kitwe and Congo operations. There's also a small operation in Kolwezi. So that's 38 million. The rest of it is really going into discharge debt. And, we will be looking at increasing our stocks. Being a private company, it's always been tough to fund the growth of it's a hungry animal, a steel business. It's very capital intensive. So we'll take a bit of pressure off from a borrowings point of view, which is actually great in the face of the recent increases, and it looks like another increase going from Mr. Mboweni. It looks like it's on the cards on the basis of the CPIX being higher than anticipated. So it'll give us some welcome relief there, and it will also obviously reduce our costs. Interest is one of our very large costs. So acquisitions, I think we will probably fund by placing shares at the time, because depending on the size, if it's a 50 million rand deal, we could fund it. If it's a 500 million rand deal, clearly we'll need to look elsewhere for funding.
How different are those markets in the likes of Zambia and the DRC to the one in South Africa?
They're very mining orientated, a lot less formal. There is ever-growing competition. At one stage, when we opened up 10 years ago, there were very, very few players there, just a few local players. But that has changed. I've got a few of the major players in there now, so it's becoming very much like South Africa. I mean, the margins that we've got now in, for instance, the Lusaka area is actually not dissimilar to what we have in Johannesburg, believe it or not. But it is, we have a great strength here because our supply chain is very, very well oiled. We know it well. We've got good transporters that are really partners in our business. And managing that is one of our definite strengths. And we've got a high volume. We're sending thousands of tons up there a month, so we're able to give customers very, very good service, which most of the other players can't do. So we've become a household name there, and so we're in a good position there.
Who are the big competitors to your business?
Well, locally, the two giants are Max Steel and Trident, been around for many, many years. Baldwin's also a very, very old business. In fact, my father used to buy from Baldwin's in Rhodesia 40 years ago, so they've been around for a long, long time. But the two big ones, as I say, Mac and Trident, are probably 6 to 7 times the size that we are. Baldwin's, owned by Kulingeli, is probably about 30% bigger than us. And then we fit into the next tier. We're probably around about just regarding Robo. Robo is principally a tube and pipe manufacturer. They're a very big consumer of steel, but putting them aside as not a stockist, we'll be sort of occupying the next space. Obviously, there are a lot of other private companies that we're not always 100% sure what they're doing, but we are pretty confident that we are number 4.
The option around one of the big drivers for the listing, you've got about 8% ownership at the moment. Are you looking to expand that, and where else are you going to be focusing on BE?
Well, as you're aware, BE is a 5 categories involved in BE, and ownership is only 20% of that. Well, I think we'll go for maximum points. There is no reason why we shouldn't. We're getting to know our new black partners. And hopefully they will add some synergies to the business, particularly in respect of marketing into the mines, for instance. But I think that, in South Africa, we obviously still see South Africa as our main market, and I think that it would be prudent for once to make sure one is fully empowered. Clearly, we have a little bit of an unknown entity in respect of our suppliers, principally Mattel, and they have an unknown BE status at the moment, but they are looking to make the publications early next year, at which stage we will know where we are. But I think also the BE strategy goes beyond. It's not just getting points for yourself. I think there's a greater cause to serve there. I think it's good for South Africa, And, if you look through the B chart, I think it's been well thought out, and I think that it is going to help to close that gap between the haves and have-nots, and I think that's, we need to do our bit there. So we're for it.
Just to close off with, we saw Mattel being asked over the knuckles by the Competition Commission. You are a big buyer from Mattel, given their size in the market. Will that have any effect on you?
Not really, because, we're simply one of the people that buy from them, so the prices may go up or down, depending on the severity with which they get wrapped from the knuckles, as you say. The strange thing is that Mattel's prices actually aren't high. We've been involved in importing since 1993, and we watch the markets very, very closely, and we haven't been able to import anything for 18 months, or certainly not any substantial tonnages. So the fact of the matter is simply that Mattel's prices are not, they're not overpriced. In fact, quite frankly, I think they're between $80 and $120 below the international market. But there's obviously a greater pledge.
William Battershill is CEO and chairman of the SI, and he's in the steel industry, so he should probably have a bit more insight into what's going on than most. Don't go anywhere. It's up. Off to the US. The scorecard.